Stock to flow essentially is the inflation rate of Bitcoin flipped upside down, and then you stretch it, and so it matches the price, right? And the coefficients of the regression that matches it is essentially the amount of stretch. You sort of like, the inflation rate's going down, 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 down. You flip it upside down. It's actually on a curve. Sorry, it's not log. It's on a curve downwards, like this. And then you flip it, and it looks like a curve upwards. And then you stretch it, and then it matches price. Okay, and it's really a curve match, and based on this inflation rate. And I think the curve starts to fall off because the relationship of what we talked about. So like the flaw in the stock to flow, in my view, is that it views Bitcoin as the asset class. Yet investors do not think of Bitcoin as the asset class. They think of digital assets, crypto as the asset class. And you can talk to any family office. Hey, what are you buying? Bitcoin, a bit of Ethereum, maybe Solana, some NFTs, right? So they're deploying that capital that they've reserved into the bucket called crypto assets. And so now it's been diluted. So like 2015 is interesting. It deviated from that line because Ethereum came along. And now in 2021, like last year, it deviated further because we already knew this, right? Even in 2017, people were buying shitcoins, right? Everyone was buying a whole lot of like crap, but it was retail. But the bulk of the money didn't want to deal with all that crap, and they just bought Bitcoin. But when Ethereum came along, they bought Bitcoin and Ethereum, and now they're buying all sorts of things at large scale. And so you see that deviation down from that straight line. And I've been waiting to do this chart, trying to figure out how to do the chart of stock to flow of the crypto asset bucket, and maybe it actually brings us back up.
Right.
Maybe that one works. So I don't think that we're on this path with Bitcoin. I think it's overvaluing it. I don't think we're going to do 110% per year according to stock to flow. So which makes it very different. I think it's got fundamentally, the idea is good, right? The fundamentals of the idea is that we've seen in the nature of financial markets, this is the end game of how we value things. So that's solid, right? Mm-hmm. And so then he did it with Bitcoin, but I think it was with a mindset of a maximalist saying this is the only thing that will exist. So even in that, the model breaks down because Bitcoin gets to zero inflation, so the price should go to infinite, and it should be the rule of the universe. And I think if you to take the model and then you add to it the real dynamics of the market of competitors to Bitcoin, and there are competitors, because you cannot tell me Bitcoin dominance is 100%. It's far from it, and it's like, you cannot create a model in what you wish the future will be. It has to be based on reality. He did that model, and shitcoins were in existence, obviously, and it was gaining dominance. So I think that needed to be taken into account. It's about scarcity and valuation. It's not a demand and supply model. The idea around it is the more scarce it is, that creates a dynamic around demand and supply, both sides, not just demand. Because every market we see demand, you see supply meted, right? Because otherwise you can't buy the asset if no one's supplying it. So it's a model around scarcity and valuation. And so it sidesteps the issue of figuring out the random walk of demand and supply, which is what I do to get there. It creates a really nice, it's kind of like E equals MC squared. It distills down into something really clean, and you don't have to look at demand and supply. Everyone's trying to work that out because it's a complex beast. And you just go, look at this. This is scarcity, and this is how we should value scarcity. I just don't think he acknowledged the real scarcity was actually inclusive of Bitcoin, which diluted the scarcity, inclusive of shitcoins, which dilutes the scarcity. I actually love the model. I think that it just needs to be broader.